Kicking off a fairly quietish morning, well, fairly quietish day yesterday. News headlines and stuff, data and whatnot, but we certainly got some market moves. Just give me a second. I need to go and find Gregor because he's coming in today. If he's in there, he is. Let's get him promoted. Right, that's done. Right, so while Gregor's coming on board, let's go over some of the headlines that we've had yesterday and today. There's further stories out about China, more provisions for the housing market. They're going to apparently slash some home buying taxes. I think this is something they've mentioned before, or it's another round. I can't remember. I've lost count of what they're doing over there. More plans to boost the property market over there. We had a bit of data out starting over in Japan. If it's got it on here, where are we? Machine tool orders coming in healthy looking, up 9.3% versus minus 6.5% previously. That's year on year numbers there. Over in the UK, we had the jobs data out. Not that you can rely on it too much, as they're still faffing around trying to count the eggs and the beans and over there and get it right, but the numbers are what the numbers are. So claimant count came in a little bit softer at softer than expected, but still up 26.7k versus 30.5k. What was the worst news was the unemployment rate rising to 4.3%, much higher than expected and the prior month. That was accompanied by a move in wages as well. Overall earnings rose 4.3%, well above the 3.9 expected and prior. So that went up. But if you take out bonuses, they actually came down 4.8%, not as much as the 4.7%. There's probably a bit of noise in here from prior negotiated wage deals the government did with rail unions and whatnot. Probably not next month, but the month after, so 2 reports time, we will probably see some of the minimum wage hikes that came through in the budget and whatnot, maybe starting to kick through into there and some of the other stuff as well. So that budget may impact wage data later on, but that's months down the line. But for now, a little bit negative on that higher unemployment rate. That's the bad news there. We had BOE's chief economist Peel out again, saying that it wasn't obvious 2 years ago that CPI would now be at target. Shows their foresight, really. It says a large part of the inflation reduction has been by design. A bit of a victory lap there, having to chase it up with interest rates, and now they're claiming victory on the way down. Amazing. He says they've seen substantial disinflation in the UK economy. The rate cut last week does not mean that the job is done. Pay growth is quite sticky and at elevated levels, and that growth is hard to reconcile with the CPI target. He said the direction of travel on rates is likely to be gradual, and says the real question is of how far and how fast they go on rates. Over in the Eurozone, we got some data out there as well. Germany, some final CPI numbers there, pretty much unchanged. Well, everything was unchanged, really. So moving along from that one, 2.4% inflation, confirming that rise from 1.8% previously. We had the German zoo out, which was yet another stinker. Falling to minus 91.4. Let's have a look at the old chart of that one right now. Look at that. Over the last 4 years, it's only been positive for 5 months, that number, and getting worse and worse and worse. Pretty amazing there. It was improving earlier in the year, but now it's taken a bit of a bath again. So as you can see, a big downtrend going on there and not looking to improve. That was accompanied by the main economic sentiment or the expectations number dropping as well, 7.4 versus 13.2 expected, 13.1 prior. So not looking good at all over there in Germany. Things are going to potentially get worse because IG Metall, the big union over there, workers' union there, has agreed a pay deal with employers. Not quite as much as they wanted, but they've agreed for a 2% rise April 2025 and another 3.1% a year later. This is on top of a big 8.5% pay increase that they got last time around. Why it's bad news is because we know, obviously, the economy is currently in the shitter, particularly in manufacturing. Volkswagen shutting up plants, getting rid of workers. They've also got pay agreements to be had next week as well. So I don't know how they're going to go. So wage increases while your economy is doing crap is not a good recipe for either inflation or for helping the economy along. But that's the position that unions hold over there, and that's the situation they're in at the moment. But I wouldn't say they were huge increases. IG Metall were looking for something like 7.6%. So they got, I think it's a cumulative around 5.1%. There's some added payments, pay bits and pieces being chucked on top of that as well. Over to politics, and it's looking like the potential for a February general election over there. The confidence vote may be held, as mentioned yesterday before Christmas, on December the 18th. So we're looking at a February election over there, well, depending on the confidence vote and how that all goes as well. But that's the date being circled on the calendar, December 18th, for the confidence vote. Fed's Kashkari was out saying the economy is strong, but inflation has not been vanquished. So striking a cautionary tone there. Aside from that, that's it. Been a bit quiet. Obviously, yesterday was half holiday-ish in the US. Bond market's closed, but plenty of moves still to be seen. Gregor, how you doing, mate?
Hey man, I'm here. I'm fine, thanks.
Watching
Cryptocurrencies for the last few days.
You've what, sorry?
I'm saying that I'm watching cryptocurrencies for the last few days.
Oh yeah, you and everyone else, mate. Yeah. I might show that one a bit later as well. Just the madness going on in cryptos that I popped in our Skype chat earlier. Right, do you want to take it away, mate, and show us what you got today?
Yeah, sure.
Let me hand you over the screen. All yours, mate.
Yeah. I think that's right. Okay. Can you see these two charts?
Yeah, got it all, mate.
Yeah. Okay, so actually last time I also already discussed and make some comparison with compared dollar moves during Trump's last elections and now in 2016, and now once again I brought up this chart because I think we have some very similar patterns here. So back then in 2016, when Trump was elected, we have seen a very nice push to the upside, both on stocks and the dollar at the same time. But then in December, we have seen a strong reversal to the downside on the dollar, and this has caused even more gains, obviously, on stocks and other markets. Now we have some very similar pattern, and I'm just wondering if maybe something similar could occur. We are still seeing dollar quite strong. Stocks are also still looking very good. We have already also cryptocurrencies that are making some very sharp moves to the upside. So I'm wondering if maybe there will be some FOMO playing out on the stock market, if there will be even more inflows. Of course, this will be visible and recognizable much easier if we will see dollar reversing to the downside, because then obviously some big flows will be happening, and this could actually cause some very extended and strong moves to the upside, in my opinion, on the stock market. But if we'll see some very extended sharp moves from here, I just think that in 2025 it will be a dangerous place, and I think that some major reversal in trends could actually then show up. But for now, as I also said last time, the dollar is still in this recovery mode, and I think that there can be even a push towards 107 area. We are just breaking this trend line resistance here, connected from October of 2023. So actually 1 year old trend line is now being broken, and definitely there is room for further upside. Some back and forth moves could happen. We have the US CPI tomorrow, I guess. So maybe some slow price action will be seen, but if we see any solid retracement, I just think that there is room for more upside in the short term. But as I said, maybe in December, we are going to see this wave C trading at this strong resistance area up here. So I would not trust dollar once we are at these levels. I think that there will be a risk for a reversal. And if that's going to be the case, I think, as I said, that stocks could experience some very sharp moves to the upside. So when I'm looking at stock market, it's very hard to find any kind of a good setup right now, right here. Even if we will see an extensions higher in the fifth wave, you should watch and observe this potential retracement. I think that very nice resistance is now being retested here, but what I would be watching for retracement here on dips is at 5,900. That would be the first support if we are going to see maybe another fourth wave here that will later on send us even higher. But 6,000 for now, it's definitely a very important level here and not worth to chase it. I just think that there is a risk for some retracement in the short term. What we are seeing is Chinese shares are coming to the downside. Hang Seng Index is breaking out of this consolidation. So I think that Aussie will retest, possibly even break this 6,500 level. If you look closely here on and zoom this in a little bit, we have this ongoing impulse down from that swing high. So obviously this impulsive sequence suggests that we are going to see more weakness. So as long this support holds here, I mean this low from last week, I think that it's worth to give it a try on the short side. If we'll get in the meantime this ABC rally, then this very nice resistance could be seen at 65.90 area or so. That was a minor swing for here. So after any kind of a near-term bounce, while we are above that support, I think that there will be room to catch this downside and finally maybe even get involved when this support will be broken a bit later. Also, I think that last week we talked about dollar Chinese yuan. We are seeing some very nice break to the upside. This head and shoulders bottom formation has been even retested here, and now we are just flying higher, and this makes gold very, very weak. And what's the most important for gold right now? Well, actually, the most important breakout was yesterday when price broke through this swing low from last week, because you know market made a pretty nice rebound at the end of last week. But then I was a bit skeptical, didn't really know what market will do at that levels when we were trading around 2,700. But since this price was rejected exactly at this trend line, and now we are printing here new lows in the near-term basis, I just think that this gives us a very important confirmation that most likely we have an important significant top in here, and that much more weakness will be seen. Now, maybe we will continue straight to the downside to make this first leg even more aggressive and extended. But if maybe the US inflation data will try to limit some near-term weakness here, I just think that whenever we get this ABC rally, there should be more downside ahead. Of course, it's just very hard to say from where and when we will exactly get a bounce. But whenever we see bounce, let's say for the 38.2% retracement or so, I think that there will be a chance to join this downtrend. Now, when it comes to a slightly bigger picture, to give you maybe full perspective here, we are just stepping into the first phase of this higher degree black wave 4, and we said that most likely weeks back we were trading here, and now we are in this stage. Okay, so we are in the middle of this fourth wave retracement, and big demand is down here, in my opinion, around 2,500 to maybe even 2,400. That area where we got a lot of overlaps here through the first 6-8 months of this year. So this will be a very important zone. Also, looking at silver, we are coming quite aggressively out of this wedge pattern. Now, whenever wedges are completed, you can see a retracement all the way to the starting point of the wedge, which is actually around $26, $27 here. So on silver, I just think that even this one is pointing to more weakness. If you look here also on a 4-hour time frame, I'm quite certain that that's an impulse down, because we have a pretty steady decline here without any kind of a serious overlaps. So this makes down an impulse, meaning it's a new change in trend, and most likely after any bounce we will continue to see more weakness. Of course, for now we could maybe find some stabilization here while we are testing these levels from October. Maybe even this goes back to August swing high as well. That should be or can be some important price zone for the next few sessions. But regarding metals in general, it's also important to maybe to look at gold-silver ratio. We can see that it's coming quite aggressively higher. I think that there can be more upside, or maybe even just we will stay stuck here, this range. But as long as this one somehow is looking more bullish than bearish, this makes me think that metals will stay in this deeper consolidation. Earlier I said maybe it's worth to keep an eye, a very quick look here on Bitcoin. So obviously this Trump related euphoria is driving all of the markets to the upside, especially on cryptocurrencies. So what's important here to understand that we are basically breaking out of this fourth wave consolidation. So we are in a fifth wave. We can already see a lot of mainstream media. Everyone is turning aggressively bullish. They are calling some very crazy price targets, but I always try to look and define near-term levels rather than focusing on any extreme levels. So what I'm looking at, it is at 95,000 to 100,000 is the next potential upside price level. But since we are the fifth wave here, I just have to be realized that maybe already later this year, or ideally in 2025, we will see a reversal again in price, and it will be quite ugly. We can see a lot of inflows here going into the cryptocurrencies, and of course, as always, that's a very late stage here of this cycle. And as you know, if we move into very extreme levels with optimism, we know that market most likely will do the opposite here. And if you just for final thoughts here, where I think that Bitcoin is regarding the cycle model, well, keep in mind that each time when we have seen a pullback, or I should say a pullback of 70 to 80% of this retracement, then market has been in recovery mode for around 35 months. You can see here this. So after these pullbacks in red, we have seen a recovery for 35 months. Okay, now keep in mind that this current recovery on Bitcoin is already here since the beginning of 2023. So basically, we are moving slowly into very late stages of this current recovery cycle, but everyone now trying to show up like we are seeing a bull run right now. Well, actually, we are already in recovery mode after this 70% of retracement for the last 2 years, if not more. So I think that you have to be aware that we are in a very late stages here. Of course, moves can be very explosive and volatile still to the upside, but when it comes time projection, I just think that maybe in 2025, we will have to be aware of potential retracement here, and that buying into this current phase, it's very, very late. Okay, so that's what I had. If everyone has anything to add, Ryan, you.
Thank you very much, mate. Yeah, good stuff as always. And if you've got something you want Gregor to look at, just ping it in the chat. You going to hang around for a bit, Gregor?
Yeah, sure. I will be here.
Yeah, cool. Just we'll keep an eye on the chat there if you throw anything, people want to throw anything at you. Right, I'm going to grab the screen back quickly. Make sure you can see that. See that okay?
Yes.
Cool. So while we're on the cryptos, I saw this yesterday. This guy,
Yeah.
okay, he created a meme coin yesterday, called Zapcat, just to see if he could pump it while all the other cryptos were getting pumped. And this is what happened to it from yesterday. It went up nearly 8,000% over the course of a few hours. His target was to get a market cap of $1 million. And then he said he was going to tase himself if he hit a 1 million market cap. Well, it did hit the market cap of 1 million before coming back. So now he's got to apparently taser himself. This is the bonkers world we live in at the moment. That you can just create a meme coin out of nothing and make it go up 8,000%.
Who is buying this? His followers.
You can see it all here. Just people. Just, I mean, obviously there's been a few more sellers at the moment, but yeah, I mean, I was watching this last night when I was doing the options. You can see a lot of people selling it, but yeah, people were buying this all yesterday. You know, well, it goes back hours, but people were. Well, you can see people just piled in.
He was actually bumping his own coin through Twitter, I guess.
Yeah, pumping it. It was just, he made a joke of it. It was a complete joke. This guy, and yeah, I think he burned a lot of tokens by accident as well. I don't know. He says it all. I made the dumbest meme coin I could think of to see if alt season would send it, and it did. And everyone jumped on board. And bonkers. Absolutely
this
bonkers.
Actually really tells us in which phase of this current cycle we are in. Okay, yeah. If you're seeing these kind of stories popping up, I just think that you have to be very, very careful here. And that this game will not end up well.
No. Well, I mean, look at this up the top here. Look at some of these gains that you're seeing in some of these cryptos, just in the moment of Trump's win. Again, this is another one that only started yesterday. Rocket to the moon. Bonkers. Absolutely bonkers. And, people are in every second, buying, selling, buying, selling. It's just amazing. If you're not in at the ground floor, then it's a very dangerous trade to get in. But if you can pick one of those, it can make your fortune in an instant. But anyway, let's go back to looking at something more sensible. That's FX markets, if you can call them sensible. Dollar CAD might be on the move. Finally, we might be getting a bit of a break of this 139, 50, 60 area. We've had a few goes trying it recently. What it has done is, for once, it's broken above this 139.50 area and it's starting to hold it. So that's the first point you want to see happening here if we're going to get a move up to the fabled 140 area. And just now it's pulling back from the fresh high down to the 139.58, 59, 60 level. If it holds that, then it's going to give it the impetus to push up. So maybe at last we're going to get a move up to this 140 and well, you've got to go back onto a real wide chart to see what happens next if we break that. If we do get above 140, and I'm going to drop some buy stops in, I think, shortly, then first area is going to be this sort of traffic area around 142s is a bit of a level, but you've got to keep going left, back quite far to start picking your levels up off of here. So yeah, 142.65 just across the top there. It was previous weekly highs, but it's really a case of where it's going to stop. Might have to be a bit of price discovery if we get above 140. But the obvious target for a break there is going to be that huge double top. 146 is high, 146 is near to 147. So that's the big one. But for now, it's making the technical moves it needs to, holding the areas that it's breaking. It's always the first sign. I was looking for a dip. Everyone was looking for a dip in this one. We haven't got it. So the only way to really trade it down, unless you want to buy it here and shut your eyes, is to wait for a move to 140 and see if you get a break. I may all still be interested in a little short up there as well, just for a big figure scalp, because it is going to be a big one. And when we haven't traded a level for a long time, I don't mind having a little scalp against it, but it depends on what the price action looks like as we get up there. If we get up to sort of 90s and we hold, and then we do 136.70, 90, 136.70, 90 for a while, and we get a bit of building action that looks like it's going to blow, then I'll be less inclined to try a big figure short. If we go from here straight there, then I'll try it. So yeah, you've got to watch the price action from this point. We've got a few other pairs playing technical niceties with the levels. Euro sterling, that had the break yesterday through 83 and held it straight after. We got a dip down through my next level around this 82.76 level, and we were holding below, went to the low, then we came back above. Exclude that move there, that's the broker roll, so it's a false spike, that one. But so if you take that out, we were holding overnight through Asia this level again, so that's really key now. But we went up to 83s, couldn't get through, and now we're coming back down again. So this is your ball ground for now. If we hold again here, then maybe we do get a move back up through 83s. But that's the game being played now. If we back below this level, we're probably going to test those lows, and then we need to see if we're going to hold those lows again. Remember, this is euro sterling, so it can do a lot of sideways, a lot of looking good at price action, and then it can make a move. But you know what to do here. I was half tempted to hit a short on that one, but I didn't. Just looking at some of the other pairs, a lot of this is moving around, what's going on in euro and cable data and whatnot. So I'm not actually confident in anything at the moment right now. Don't have a lot of conviction. I tried a long in cable down here in the 128, got in 128.05, knocked some out for 10 pips, and then we had this break here, and I decided to get out at 98. So I took a little bit of a loss on that one, and then we bounced, obviously, right back up again. But it's not out the woods. This break here, 128.40s, cleared through that low as well. So it puts a bit more of a bearish tone on things at the moment. If we look at the 4-hourly chart, it's keeping this momentum going. So it's still looking very bearish right now. But this is a decent level, this 128. So, you know, see what happens if we get another retest on that one. Euro dollar also coming into a key level down here as well. Another one you have to go on a wide chart to have a look at. So we've got two fibs in here. Where are we going? So big level, the 38.2 fib. We've been down here before. We've been under it. It's one of those that have become a level all on its own as well. So we have plenty of action back here in 2023. We're down here again. We've tested it early in 2024, and we're on it again. Okay, down 106.11, part of the 106 figure. Actual low is bang on it at the moment, 106.11. So this is a bit of a line in the sand. We've come through some of these other levels. We had an intermediate level, 106.35, which is again another long-term level, but not a one you'd maybe lean against. It did hold the price action yesterday for a while. But this 106.11 is a bit of a doorway. If we get under there, then, you know, we could well be heading down to this 105 area. And that 105 area, as I've been, where's it gone? No, I've lost it. There we go. You might not be able to see it because it might be a bit messy. Let's go into this one. That might be easier. Got lots of charts all over the place. Where are we? There. That'll do. So this 105 is a big one, a real big one. Okay, goes all the way back, all the way back, all the way back, all the way back in time. So that's going to be a real test if we get down there. If we break that, then, you know, we could be heading back to this sort of thing that we got in 2022 where we head into parity and even further. Obviously, there's going to be plenty of levels in the way. I'll need to get some lines out if we get down there, but 105 is one of my big levels. So I'm potentially looking at trading that if we get under this 106 level, and there's no signs of any let up going on at the moment. Another one I want to look at, I don't know, euro sterling moving like a meme coin. Not quite. One day, mate. Dollar China, as you know, I like to keep an eye on that one. We are getting up towards this zone up here, 728, 727s, up to 730s. Okay, this is an area I'm getting a bit interested in to maybe try some shorts against. I've been trying hard to sit on my hands and not get in too early. But I think if I see us up here, 728, I might be tempted just to start putting on a little bit, run a stop above these prior highs, probably 137s, 138, something like that, if we get up there. So this one is still moving in that direction. I think the PBOC and officials is going to start squawking about that if we get up there, and if they decide to really put the brakes on, then they'll do so. So one I'm keeping a close eye on. I know Gregor looked at gold. Let me go back to my normal charts, but I'm going to have another look at it anyway, because we have been carving through some of the short-term levels. Let's go into that one. And again, a little bit of price action where you get breaks and then you get holds. So 26.20s was a level I had along there, and we dipped below, came back, give or take a couple of bucks. We've held it, and now we're back down. Testing the fib of this phase of the move, so it's a bit short term, just from September. But here we have hitting another one of those little minor lines around that fib, and we're bouncing from there. This one, 2600, hasn't done an awful lot. It was holding up for a little bit, but we've gone through. But we'll see if we hold resistance there now. If we do, that's going to keep the momentum going, and then we're potentially heading down much lower. Irrespective of all the short-term lines, obviously the big one is the old one, which is down. Let's go there. Down at the 25.30s. Oh, I'll go a bit wider. Let's go into a 4-hourly. Oh, even wider than that. All right, I'll leave it for there for now. You know the level, this big one here, 25.30. It was one of the big break points that led to all this. So it's going to be a key level. So much as we had similar levels here, 26.70, 80, that we held below for quite some time, and then when you get a break, it's explosive. Okay, but this was all much more short term compared to this. So this is going to be a big one when we come down here, if we get down there. But for now, it doesn't look like it's bouncing at all, even when we hit some of these levels. So it's a seller's market at the moment. So if you're trying to fight this one, you need to be careful. You need to pick your points where the price is more likely to bounce from. All these are short-term lines, okay? They're not lines I would necessarily trade. What I would trade is the bigger ones, the more confirmed lines and areas that we've got that have decent historical price action. Okay, those are the ones I'll give more weight to. So just be careful if you're trying to catch the knife there. Copper's looking awful as well. This one's really getting a kick in the nuts at the moment. Was holding around this 433 area, 430 area, had all the Trump mess, and it's just kept going and going and going. And it's a little bit the same for a lot of commodities at the moment. Oil heading back down towards its lows. And again, can it hold this time, or is this time the moment we're going to break? Because we've been down here often enough over the past couple of years, and we haven't managed to stay below for any real length of time. But this one's looking a bit similar to Euro Sterling, where we had the highs and then we just gradually came down, get a couple of bounces, but we just keep coming down, coming down, coming down. I'll show you that quickly comparison. Similar thing, where we had the highs and we just keep bleeding lower, bounces get shallower. So whereas this one broke through the 83s, this one, oil could be heading in the same direction. A lot of trading is just about patterns, learning the patterns, learning how they work. this doesn't look bullish at the moment. And the more times you knock on this door, the greater the chance it's going to open. What we also need to keep watching, or get back to watching, is yields, because bond markets are fully open now, and here we are seeing yields. They've obviously had a move up on the back of what we saw reaction yesterday in the dollar and whatnot. So it's off to new highs in these yields, and if that keeps going, that's the 2-year yield. 10-year, not quite getting back up to the highs. Okay, so it's a bit more of a move in the short end. Just reflects maybe some change in expectations for the Fed in the 2 years as opposed to the 10 years. But obviously, if we start getting back up to this 4.5 level, that's going to get the dollar moving as well. Dollar yen, quickly, trying to get into 154, not managing to get in there and stay there for very long. But again, momentum is still with the bulls. We look like we're now holding above this 153.40 area, which was a bit of a resistance point, bit of support. It's done a bit both sides. Now we're holding it, so that might give it the base that I was looking for to give it a shove up to 155, and then we'll see what happens up there. But there's no signs of this changing trend at the moment. So if you're looking to fight things, fighting the trends, then just be careful where you try and fight them. Maybe try and go with a trend rather than constantly trying to fight trends as well. Aussie dollar, that's creeping lower now. Maybe the weight of these commodity moves is finally taking its toll. So this one's not looking good either. We could be heading much lower now. If we break through this area, we had a little poke underneath it, 65, 30, 40-ish. We had that move, then we got back above, had a decent bounce. Now we're back down to it. So if we go through it again, then we might be heading much, much lower. 63, 50, 60 is the next level I've got down here, which is a pretty decent longer term level as well. So that'll be potentially an area where we might see a reaction and a possible bounce if we go there. Aussie Kiwi, this one I've been trading off the top here, slicing and dicing. It's looking now like we're holding below this 108, 15, 20 area. Not had a real test, just a half-assed test, that candle there, but now we're moving lower. So been sitting in this one since the beginning of October. I'm looking for a move back down to the magnet at 108, but I think we're going to need the RBA changing its tone at some point to help that along. So that's what I'm waiting for. But I am being a bit more dynamic in adding and cutting as the price moves around. We've got Aussie jobs this week, so that might be a bit of a killer for this one, or indeed send it back up to the highs. But that's looking at the moment like a decent double top, but we need to get down below that low, and then this 109, 45, 50 area. If we do that, that will look like that double top is really solid, and we're going to start breaking down again. Right. I don't know if you've got anything else you want to look at, Gregor. Any questions, or a bit quiet on the old chat today, you lot? What are you, half asleep? I think you need to liven up a bit. Yeah, thanks. You're good, mate. Yep. Cool. We'll call that a session then. Thank you very much, Gregor, for all your wonderful charts and analysis as usual. Thank you. Thank you to all our viewers for coming to the Flow Show. Catch us on F.A.C.E later. Otherwise, we shall see you tomorrow. Cheers, mate, and thank you, everyone.
Bye-bye.